Good evening, guys. Good evening. You're welcome to tonight's weekly market analysis session. You're welcome. Can you hear me? If you can hear me, I'd like to know. Drop a comment if you can hear me. Can you hear me? Can you hear me? How are you doing? Sure you had a great weekend. If you can hear me, I'd like to know. Drop a comment. Can you hear me? Can you hear me? Can you hear me? Can you hear me? Hello, hello. Can you hear me? Can you hear me? Can you hear me? Good evening. It's good to have you in the class. You're all welcome. You're welcome to tonight's session. Can you hear me? If you can hear me, drop a comment. So without wasting much time, we'll just go straight to the chart. Okay. As you know, we start with the 7 major currency pairs. Okay. So let's go straight to the chart while others join us. Okay. So the first pair we'll be looking at is GBP USD. GBP USD. Okay, so as you know, we need to start with the weekly time frame because the weekly candle just closed. So we use price action for last week to predict what is likely going to happen this new week. Okay, as you know, as technical traders, we use price history, what price has done in the past, to determine what it will do in the future. So it is important that at the start of a new week, you look at what price done the past week. Okay, then with that you'll be able to predict what is likely going to play out for the new week. Now, if you look at GBP USD, you would see that for the past 5 weeks, USD GBP USD has been in a range. It has been in a range. That simply means that neither the buyers nor sellers had the upper hand. Neither buyers nor sellers are in control. Okay, so price has neither been bullish nor bearish for the past few weeks, and that would have been a difficult market for trend traders. If you are trend traders for the past few weeks, you will see that most times the market does not eat your take profits. If you are setting your take profit at 60, 70, 80 pips, most times the market will not get to that level. Probably most times it will get to 50 pips, 40 pips, and reverse. and that's because the market has been in a range. Okay, those who will be making money in the market for the past few weeks are those who have a strategy that works in a ranging market, or those who scalp the market, those who trade maybe 15 minutes and 5 minutes time frame. Okay, so if you look at GBP USD chart, you will see that it has been in a range. It has been in a range. I think it's been trying to break. We have a resistance here. Can you see this? We have a resistance here, and if you go back, you would see we had a resistance here. So you can see price has been trying to break that resistance level. It's been trying to break that resistance level. So I think what is likely going to play out this week, if a candle, let's say a 4-hour candle closes above that resistance, one could consider selling. One could consider selling, but considering how last week candle closed as this is a spinning top, or you call it a doji. Call it a spinning top or a doji. Spinning top and doji indicates change in trend from bullish to bearish. When a doji or a spinning top forms in an upward trend, it indicates that the trend is changing from what? Bullish to bearish. And you'll see that we've had several bearish reversal patterns at that resistance level. You can see that we've had several bearish reversal pattern at that resistance level. So there's a high probability that GBP USD will drop. There's a high probability that the dollar will gain value against GBP. Remember, when you are selling, you expect the counter to gain value against the base currency. And when you are buying, you expect the base currency to gain value against the counter. I hope you are following. Please, I would like to see your comments. I would like to see those who are in this class. Please drop a comment if you can hear me clearly. I want you to drop a comment. Okay. So based on what we have on the weekly time frame, based on the pattern we have on weekly time frame, this is a bearish setup. Okay, this is a bearish setup. The fact that the buyers have not been able to break this resistance indicates that the sellers are still in control. Okay, so let's go down to daily time frame. Now, after the formation of last week candle, like I said, we have what looks like a doji or a spinning top. If we go down to daily and we see a bearish reversal pattern, if there is a bearish reversal pattern on daily time frame, then we should be looking for sell opportunity this new week. Okay, so let's go down to daily time frame. So before we go down to daily, let me apply a vertical line on last week candle. So let's go down to daily. So you can see on daily also, you can see that GBP USD has been in a range. It's obvious, right? You can see it. GBP USD has been in a range for some time on daily also. So if you look at the candlestick patterns that formed last week, this is Monday, Tuesday, Wednesday, Thursday, Friday. You can see those candlesticks. Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so this candle is called a shooting star. This candle is called what? A shooting star, which indicates change in trend from bullish to bearish. Okay, now after the formation of this shooting star, now you can see the body of this shooting star is bullish, so we call it a bullish shooting star. Now when a bullish shooting star forms in an upward trend, you are expected to wait for the next candle to close bearish before you sell. I'm teaching you guys how to use candlestick pattern to define the trend of the market. Okay, when a shooting star closes, a bullish shooting star closes an upward trend, you wait for the next candle to close bearish before you sell. And you can see on the daily time frame, the next candlestick closed bearish, which indicates that sellers are showing up in the market, and that will be the right time for us to risk selling. Now, you don't just jump in and start selling. A lot of retail traders will jump in and start selling. Now, another thing I consider before I jump in and start selling before I execute a sell trade, okay, is the low of that shooting star, the low of this shooting star. Can you see? The low of that shooting star. You can see that the next candle, the bearish candlestick that closed after that shooting star, didn't close below the low of that bullish shooting star. If the next candle had closed bearish below the low of that shooting star, that would have been a good sell setup. That would have been a confirmation that we have more sellers in the market. That would have been a confirmation that we have more bears in the market. That is when one will risk selling. But you can see the candle that closed after that shooting star didn't close below the low of that shooting star. Then the next candle that closed after this bearish candle, you can see, still didn't close below the low of this bullish shooting star. So sell is not confirmed. Sell is not confirmed. The sell bias is not confirmed. So for you to sell, this is my own opinion. For you to sell GBP USD this week, you should wait for a candle to close below the low of this bullish candle. Okay, wait for a candle, maybe 1 hour or 4-hour candle, to close below the low of this candle. That is when you should consider selling. And if you are considering buying, I would advise you wait for a candle to close above the high of these candles, this resistance level. Okay, you should wait for a candle to close above the high of this resistance. And if you are selling, wait for a candle to close below this support. That is my take on GBP USD. Can you hear me? I'm not seeing your comments. I need to be sure you guys can hear me. Can you hear me? Can you hear me? If you can hear me, please drop a comment that you can hear me. I need to be sure. I don't want to be talking to myself. I'm here for you guys. Can you hear me? Okay, so that's my take on GBP USD. So like I said, GBP USD is in a range and there's a possibility for price to go up and a possibility for price to go down. But if we look at the pattern we have on the weekly and daily, I think the bears are showing up strong in the market and there's a high probability for GBP USD to sell. Okay, so that's my take on GBP USD. So if I decide to sell GBP below this support, if I decide to sell GBP USD below this support, my stop loss will be where? My stop loss will be at this level or few pips above that level, because at this level, I am considering buying. I'm considering buying above this level. So my sell bias becomes invalidated if this high is cleared. So that is where I will set my stop loss. Okay, and if I'm buying above this high, my stop loss will be below this level, because this is the level I'm considering selling. Anything that makes price break that level, my buy bias has become invalid. So I would quit my trade, take that loss, and wait for the next opportunity. I hope that is clear. That is my take on GBP USD. Let's move to the next pair. If there's any pair you want us to analyze, let me know. Let me know. Drop it in the comment space. If there's any pair you want us to analyze, let me know. Drop it in the comment space. Okay. So the next pair is Australian dollar USD. As you know, Australian USD is positively correlated with GBP USD. What that means is that if GBP USD is bearish, Australian dollar USD is likely going to be bearish. If GBP USD is bullish, Australian dollar USD is likely going to be bullish also. Okay, so if you look at, let's start with the weekly time frame. Let's see how last week candle closed. Though you can see last week candle, it closed as what we call a spinning bottom. Last week candle on Australian dollar USD closed as a spinning bottom. And a spinning bottom indicates change in trend from bearish to bullish. You can see that the preceding trend before the formation of the spinning top is what? Bearish. The trend was bearish before the formation of this spinning top. Also, another thing you need to consider is that the spinning top that formed at a previous support level. Can you see that? It formed at a previous support level. Okay, so there is a high probability that price is likely going to pull back from this support. That support level is likely going to hold because a spinning top candle formed at that support. Okay, so when a spinning top, as you can see, this spinning top, this spinning bottom is a bearish spinning bottom. It is a bearish spinning bottom. So we cannot jump in and start buying because the body of that candle is bearish. If we want to buy, we want to be sure there are buyers in the market. And how do we confirm that there are buyers in the market? The candle has to be bullish. The candle has to be bullish. If the body of this spinning bottom was bullish, we could have jumped in and start buying. But since the body is bearish, that tells us that we still have few sellers in the market. The bears are still in the market. And if we are considering buying, we can't jump in and start buying because there are still sellers in the market. And these few sellers can still push price down. So for us to buy, we need to wait for the next candle to close bullish. Okay, so if you are considering buying Australian dollar USD, you should wait for the next candle to close bullish. Okay, wait for the next candle to close bullish. Now we are on weekly time frame. Now, do you have to wait for the weekly candle to close bullish before you execute a buy trade? If you have to wait for the weekly candle to close bullish before you buy, it means this week you're not going to trade Australian dollar USD, right? You're not going to trade Australian dollar USD. So what do you do in this case? You go down to lower time frames. Go down to lower time frames to see if there's a bearish or bullish reversal pattern on lower time frame, daily and 4 hour. Okay, you don't want to wait for the weekly candle to close before you decide on buying or selling, right? So you go down to, let's go down to daily. So on daily, you can see what we have on daily. Okay, you can see what we have on daily. Price has been in a range for throughout last week. Australian dollar USD was in a range. It was in a range. There was no clear direction. It was war. Last week was war in the market. It was war. It was war. There was no clear direction. There was no clear direction. You can see that. So there was no clear direction. So what should be our expectation this week? What should be our expectation this week? Based on what we have on daily, you can see price is currently at a support level. Okay, if you go back here, you would see that it was a support level. So it's possible price can pull back. It's possible that support will hold, and it's possible that support, that support is broken. It's possible that support will be broken. Okay, so my thoughts on Australian dollar USD, if a candle closes below this support, okay, if a candle closes below this support, you can see this was a support and this was a support. If a candle closes below that support, then we should expect more bearish move on Australian dollar USD. That's my take. If this support is broken, let's say 1 hour candle or 4 hour candle closes below that support, then I would consider selling Australian dollar USD. And if this support is broken, there is a high probability that Australian dollar USD will aim for this next, we have a fair value gap here and we had a resistance, became a support. So it's possible for Australian dollar USD to drop to this next support zone or demand zone if a 1 hour or 4 hour candle closes below that that zone. That's my take on Australian dollar USD. And if I would buy Australian dollar USD, a candle must close above the highs of all these candles, which is this. This is where I will consider buying. If I want to buy GBP USD, sorry, Australian dollar USD, a candle must close above the highs of those candles, which is that. Okay, So I think this week Australian dollar US is likely going to be bearish. It's likely going to be bearish this week. And if you are considering buying, you should wait for a candle to close above this high before you buy. That's my take on Australian dollar USD. Let's go down to 4 hour. What do we have on 4 hour? Let's go down to 4 hour. If you have any question, drop it in the comments, please. Okay, the essence of this live stream is to attend to your questions. Okay, is to attend to your questions. So please always ask your question on during the live stream. Most times when you send me DM, I'm too busy. Sometimes I don't attend to your questions immediately. Okay, so that's the reason I come on live so that I can take your questions. If you have any question, drop it in the comments space. Okay, so let's go down to 4 hour. Okay, you can see on 4 hours. So also price has been in a range. Price has been in a range on 4 hour. So a breakout from the low of the range, as you know, as you can see, this is the low of the range. So we have the low of the range. Can you see the low? This is the low of the range, and this is the high of the range. So what we need to trade when the market is in a range like this, we look out for breakouts above the high of the range or the low of the range. Okay, that's how to trade ranging markets. When price goes into a range, you look out for breakouts from the high of the range, which will be the resistance, or breakout from the low of the range, which will be the support. So we have the high of the range. This is the high of the range, and this is the low of the range. This is the support of the range, and this is the high. That's the resistance of the range. So we need to see a breakout from the high for us to buy, or a breakout from the low of that range for us to sell. Okay, so that's my take on Australian dollar USD. Okay, there's possibility for price to keep dropping. There's also possibility for price to keep going up. So you buy above the high, and you sell below the low of that range. I hope that is clear. I hope that is clear. God's time, you have to fix your sound. I think the challenge is from your hand. Others can hear me clearly. Okay, the challenge is from your hand. God's time, fix your sound. Okay, so if there's any pair you want us to analyze together, please drop it in the comment space. So the next pair we'll be looking at, let's look at gold. Okay, let's look at gold. I know most of you trade gold, so let's look at gold. Let's start with the weekly time frame. Okay, let's start with the weekly time frame on gold. Okay, so what can you see on gold? 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 Okay, so let's start with the weekly time frame. Let's start from these candles here. Okay, let's start from these candles on gold. Here we had a strong bullish candle. Then the next candle also closed as a strong bearish candle. Okay, so then we had the low of this high, the low of this bullish candle. Can you see it? So you can see the bears have not been able to break that low of that bullish candle. Can you see it? If this bearish candlestick had closed below the low of this bullish candle, that would be a confirmation that we have more bears in the market. If this bearish candlestick that closed after this bullish candle closed below the low of that bullish candle, we would have confirmed that we have more sellers in the market. Okay, but you can see the sellers have not been able to break that low. This candlestick tested that low, and there was a strong rejection from that level. Price went up, sellers came into the market and pushed the price down. You know, you can see they tested that low, but they couldn't break from that low. You can see they've attempted several times to break that low, but they've not been able to break that low. That's an indication that the buyers are still in control. That's an indication that the buyers are still in control. You would only consider selling if the sellers are able to break the low of this bullish candle. Okay, so if you're considering selling, you should wait for a candle to close below the low of this bullish candle. That will be a confirmation that we have sellers in the market. But at the moment, the bulls are still in control because the bears have not been able to clear the low of this bullish candle. I hope that is clear. So at the moment, gold is still bearish. The buyers will change from, gold is still bullish. The buyers will change from bullish to bearish if the bears are able to close below this level. If a candle is able to close below this level, that is when our buyers will change from bullish to bearish. But at the moment, I think the buyers are still in control. Okay, so that is what we have on the weekly time frame. We need to go to lower time frames to see the patterns we have on those time frames. So let's switch to daily time frame. Let's switch to daily time frame. You can see what we have on daily. Okay, you can see what we have on daily. At this point on daily, this candlestick on daily broke out from that low of that bullish candle we had on weekly. Okay, so the daily candle closed below that level, which indicates change in trend. Okay, and there was a pullback. For those of you who know what fair value gap is, okay, you can see when there's a breakout or shift in market structure. When there's a shift in market structure, price is expected to pull back and fill a fair value gap, or price is expected to pull back to a previous resistance level. Simple. Okay, fair value gap or resistance level. If you don't know how to identify fair value gap after a shift in market structure, you could apply Fibonacci. Okay, now what do we use Fibonacci tool for? We use Fibonacci tool to identify premium and discount level. Okay, that's what we use the Fibonacci tool for, to identify premium and discount levels. Okay, when price hits a premium level, you are expected to look for sell opportunity, and when price hits a discount level, you are expected to look for buy opportunity. That's what we use the Fibonacci for. For those of you who don't know how to identify fair value gap. Now, what is a fair value gap? For example, on this chart gold, the fair value gap is the gap in between the low of this first candle, this bullish candle, okay, and the high of this bearish candle. That is a fair value gap. Can you see the gap? That is a fair value gap. The gap in between this first bullish candle and this third bearish candle. This gap is referred to as a what? Fair value gap. So when there is a shift in market structure, or when there is a change in trend, price is expected to go back and fill that fair value gap. And you can see what played out here. After a breakout or shift in market structure, price had to pull back to fill this gap. And you can see after filling that gap, what happened? Price started dropping. Can you see that? Price started dropping. Or you could apply, like I said, you could apply Fibonacci. Okay, take it from this swing high. This is the swing high to this swing low. Can you see that? So you apply your Fibonacci from the swing high. This is the swing high, and this is the swing low. You expect price to pull back to premium, and premium level is level above, any level above 50 is premium. When price is above level 50, it is said to be at premium level. And when price is below level 50, it is said to be what? At discount level. So you can see what price did. It pulled back to a premium level before it starts selling. I hope that is clear. So based on what we have on daily time frame, let's see. Okay, let me go back to weekly. Let me identify the low of that bullish candle. So you should wait. If you're considering selling, wait for a candle to close below that low before you sell. That's my take. Okay, wait for a candle. You could also work with this this support. Okay, so you should wait for a candle to close below that support zone before you sell. That's my take on gold. If you are considering selling, wait for that demand zone or that support zone to be cleared. Wait for that zone to be broken before you sell. That's my take on gold. Okay, that's my take on gold. And if you are considering buying, okay, if you are considering buying, wait for a candle to close above this zone before you buy. Ghost time, can you hear me now? Can you hear me now, Ghost time? Okay, so you have your supply zone, you have your demand zone. You have your supply zone, you have demand zone. If demand exceeds supply, you should buy. When demand exceeds supply, price is expected to go up. And when supply exceeds demand, price is expected to drop. Okay, so now we have identified a supply zone, or you call it your resistance zone. We've also identified a demand zone, or you call it your support zone. So if a candle closes below this demand zone, it simply means supply has exceeded demand. Okay, if a candle closes below this zone, it simply means supply has exceeded demand. Okay, and you expect price to drop. And if a candlestick closes above this resistance zone or your supply zone, it simply means demand has exceeded supply. So when demand exceeds supply, price is expected to go up. I hope that is clear. Can you hear me? Can you hear me? If you can hear, please drop a comment. Drop a comment. Okay, so that's it for gold. Which other pair do you want us to look at? Which other pair? Which other pair? Okay, let's look at Euro USD. Euro USD. Let's start with the weekly time frame. So last week candle closed as a spinning bottom. Okay, it closed as a spinning bottom, and Euro USD is currently trading below this previous resistance, which became a support. Okay, Euro USD is trading below that resistance, which became a support, and that tells me supply has exceeded demand. Okay, it tells me supply has exceeded demand. So looking at what we have on the weekly time frame, Euro USD is bearish. Yeah, if you look at the pattern of the weekly time frame, this is a bearish setup. This is a bearish setup. Okay, so you could see what played out here on Euro USD. If we had applied our Fibonacci from this previous swing high, if you had applied your Fibonacci, you can see where price started dropping. Can you see where price started dropping? Can you see where price started dropping? So what happened, like I said, after a shift in market structure, there was a shift in market structure at this point. Okay, there was a shift in market structure at this point. Okay, there was a shift in market structure. After the shift in market structure, price is expected to pull back to fill a fair value gap. And on the daily time, sorry, weekly, we had a fair value gap here. Can you see? We had a fair value gap here. You can see price pulled back. Can you see? Price pulled back to fill this fair value gap. Can you see? Immediately that gap got filled. What happened? Price started dropping. And you can see the candlestick formation that formed at that gap, which is a confirmation that the trend is changing from bullish to bearish. You can see we had a shooting star after filling that fair value gap. Can you see that? Immediately that gap got filled, price started dropping. Like I said, if you don't know how to if you don't know how to identify fair value gap, just apply your Fibonacci tool. You can see that price pulled back into a premium level, which is above level 50. Price pulled back into a premium level. You can see. So with what we have on the weekly time frame, Euro USD looks bearish. Okay, it's a bearish pattern on Euro USD on the weekly time frame. Let's switch to daily. What do we have on the daily time frame? Let's see what do we have on daily. Okay, so on daily, last week was a very tough market. You can see price was just in a range. It was neither bullish nor bearish last week. So for those of you who had who was profitable last week, Okay, it's you just understand that is the phase that the market is in right now. Okay, the market is in a range. It's in a range. Okay, so it's not your strategy that is not okay. It's not your strategy that is because when traders experience when the market goes into a ranging phase like this, most traders, that's the time they begin to change their strategy. That's when they will think their strategy isn't working. They now start looking for another strategy. Okay, you should understand that your strategy will not work in all market phases. Just know that your strategy will not work in all market phases. Okay, that you are making losses is not an indication that your strategy isn't working. It could be that the phase that the market is in is not suitable for your strategy. So you have to be patient. Okay, you have to be patient. You might be experiencing losses, or most of your trades you break it even on those on your trades. You have to be patient. That cycle will pass, that phase will pass. Okay, and your system becomes profitable. Okay, patience, patience. Okay, so what do we have on this daily? What do we have on daily? What do we have on daily? I'm not seeing a clear direction on daily. I'm not seeing a clear direction. Let's go to 4 hour. Let's see what we have on 4 hour. Okay. What do we have on 4 hour? 4 hour, we had an engulfing candle here on 4 hour. This is an engulfing pattern, which indicates change in trend from bearish to bullish. Now, going by what we have on 4 hour, this is a bullish setup on 4 hour. It's a bullish setup on 4 hour. So if I'm to trade Euro USD this week, this is my expectation. Now, after formation of this engulfing pattern on 4 hour time frame, I believe a fair value gap was created on 1 hour or 15 minutes time frame. I believe a fair value gap was created on 1 hour or 15 minutes time frame. Okay, so let's go down to 1 hour. So I want to identify the fair value gap that was created after the formation of this engulfing candle. Let's go down to 1 hour. Do we have a fair value gap on 1 hour? You can see we had a fair value gap on 1 hour. Can you see the gap in between this and this? Can you see the gap in between this bearish candle, and this bullish candle? So a fair value gap was created. So if I want to buy Euro USD, I want to see price pull back to this zone. I want to see that this gap is filled. This fair value gap is filled before I would buy. Like I said, if you cannot identify fair value gap, just apply your Fibonacci tool. Take it from the swing low to the swing high. Wait for price to pull back to discount. And like I said, discount is below level 50. Discount is below level 50. Simple. Okay. So wait for price to pull back into a discount level, okay, before you buy. I hope that is clear. Now, when price gets into this zone, like many, they will use pending orders. I do not advise that you use pending orders. Okay, buy limit orders or sell limit. I don't advise that you do that. I don't use pending orders. I want to see what price will do when it gets to this zone. I want to see the candlestick pattern that will form at this zone. There has to be a bullish reversal pattern. A bullish reversal pattern must form at that zone before I would buy. I have to see it. It has to form before I would execute a buy trade. Okay, so if price drops to this zone, then I'll consider buying. My bias will change from bullish to bearish if this support is broken. So based on what we have on 4 hour time frame, I am considering buying GBP, sorry, Euro USD, Euro USD. Okay, technically understand that the fundamentals also play a major role in the market. Understand that the fundamentals also play a major role in the market. All we are doing here is technical analysis. We are using our price history to determine what will happen in the future. But you should also understand that the fundamentals play a major role. You need to check the fundamentals. Go to Forex Factory or investing.com to check the fundamentals to know when major news will be released. Okay, so the fundamentals could also change the trend of the market. You should understand that the market is very dynamic and you have to be informed. You need to know the technicals and you need to know the fundamentals. Okay, you need to incorporate both analysis. Okay, very important. Okay, so that's my take on Euro USD. My bias at the moment with what we have on 4-hour time frame, 1-hour time frame will be a buy. If price pulls back and fill this gap, I would buy. But if this support is broken, I could decide to sell or just wait for a good buy setup. I could decide to sell or just wait for another good buy opportunity to buy on Euro USD. Want us to analyze? Let me know. Okay. So which other pair do you want us to analyze? Let me know. Let me know. Which pair are you considering trading this new week? Which pair are you considering trading this new week? I believe you guys should have, looked at the charts, and I believe you should have pairs that you are interested in trading this coming week. It is not when you come for this live streaming you get to know which pair to trade. As a trader, you need to plan your trades. There is a saying that nobody plans to fail, but many fail to plan. Most traders don't have a plan, and if you don't have a plan, you've planned to fail. It is not when the market opens by 10 p.m. or 11 p.m. that you start analyzing the market, that you start looking for pairs to trade. You've already programmed yourself for failure. If you're that type of trader, that you have to wait for the market to open before you know what to do. Okay, you analyze the market before the market opens. When the market opens, that's the time to execute. There's a time for analysis, there's a time for execution. You should know that as a trader. Most traders don't plan. They don't plan their trades. They execute trade based on emotions. Have a plan. You need to have a plan. You need to have a trading plan. If you don't have a trading plan, you are not going to make money in trading. You will keep failing. You will keep failing. Okay, Mr. Ola said we should look at Australian dollar CHF. Okay, we'll look at that in a few minutes. Okay, so Australian dollar CHF. Okay, let's look at Australian dollar CHF. Okay, let's start with the weekly. So if you look at the weekly, you would see that the structure we have on the weekly is bearish. It's obvious, right? The structure we have on the weekly time frame is bearish. This is a bearish structure. Australian dollar CHF is bearish. Okay, on the weekly time frame, it is bearish. Okay, if you apply the trend line from this high, you can see it is bearish. Okay, it is bearish. So Australian dollar CHF is bearish. So let's go down to lower time frame. Let's see what we have on lower time frame. Let's go to, so it's been forming series of lower high and lower lows, right? Lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, right? This is lower high, lower high, lower low, lower high, lower low, lower high, lower low. So that tells you the structure is what? Bearish, right? Tells you the structure is bearish. So we cannot buy unless there's a shift in market structure, and the shift in market structure using the weekly time frame would occur if this high, okay, if a candlestick closes above that last lower high, that is where the shift of market structure will take place. That is when we'll now consider buying. That is when we change our bias from bearish to bullish. I hope that is clear. So let's just go down to daily and see what we have on daily. Okay, so this is the daily. Still bearish, still a bearish structure. Okay, it's still a bearish structure on daily. Still a bearish structure. Let's go down to daily. If we wait for this daily for a candle to close above this lower high on daily, would have missed a lot of pips. Okay, market would have gone far before we joined the trend, because if you look at the current market price 5679 And if we are to wait for price to break this high before we consider buying, that is about 300 pips. Yeah, close to 300 pips. So we need to go down to lower time frames. Let's go down to 4 hour. Let's go down to 4 hour. Okay, so this is what we have on 4 hour. This is what we have on 4 hour. So on 4 hour, if we want to change our bias from bearish to bullish, we could wait for this high, okay, shift in market structure, break of structure above this level. You see why it's important to use multiple time frame in analyzing the market. You see why it's important. If you just focus on weekly, on daily, you see where you would enter. You see where you would enter, and entering at that level, your risk will be very high, right? You see where you will enter on. If you use the weekly time frame, you can see this is where you would enter. Someone who is using the 4 hour time frame would enter from this point. So before you would join the trend at this point, he would have made so much profit. He would have made so much profit, and at this point, probably would want to even pull out from that market. Okay, so that's why it's important to know how to analyze the market using different time frames. Don't just focus on one time frame. Okay, don't focus on one time frame. Use multiple time frames for your analysis. So let's go down to 1 hour. What do we have on 1 hour? So from the weekly down to 1 hour, the setup is bearish. Is bearish. It is bearish. So if you are considering buying Australian dollar CHF, wait for price to break this high, this lower high. Wait for price to break that level before you consider buying. But with what we have on 1 hour, 4 hour, daily, weekly, Australian dollar CHF is bearish. Australian CHF is what? Is bearish. Bearish. Okay, so let's look at CAD JP list. Okay, I don't have CAD JPY. Let's look at USD JPY. USD JPY will determine the trends on CAD JPY. Let's look at USD. Let's see weekly. So based on what we have on this weekly time frame, how last week candle closed. This is a doji candle. Am I right? Right? Yeah. This is a doji candle. Am I right? Some will call it doji, some will call it spinning top. Okay. Right? Both doji, spinning top indicates change in trend. So we don't need to argue whether it's a doji or, okay, we don't need to argue. Both candlestick indicates change in trend from bullish to bearish. Okay, so last week candle close as call a spinning top or a doji. Okay, also if we apply our Fibonacci to from this swing high to this swing low, you will see that price is currently at a premium, right? Price is currently at a premium level, so it's possible we might experience a pullback. It's possible price will to discount before it continue with its bullish move. Okay, so if you are considering buying, price that you wait for price to pull back to discount before you buy. That is my take on USD JPY, going by the weekly candlestick formation. Okay, wait for price to pull back to count. As you can see, I think we have a small fair value gap here on. Okay, there's a little gap here, right? There's a little gap here. So if you buy, you should wait for price to pull back to fill that gap before you buy. That's my take. For me, it will not make sense to start buying USD JPY. If I had not entered buy at this point, I don't think it would be wise for me to start buying at this point. If I buy from this point, my risk will be high. My risk will be high. It would have been the best price, or even though if you go to lower time frame, you would have identified some nice level that you would have entered buy on USD JPY. Buying at the current market, I don't want to take that kind of risk. Okay, so let's go down to daily. What do we have on daily? So you can see on daily there has been a lot of several reversal candlestick pattern on daily. Can you see that? And if you go back, you would see that resistance level at this point. Okay, you can see we had a resistance at this point. We also had a support here, which became a resistance. So that level is, it's possible because we've had several reversal candlestick pattern indicating change in trend from bullish to bearish. Okay, so if you are considering selling, okay, since we are expecting price to pull back to discount and you want to take advantage of that pullback for price to break, there's a support here that was formed. Okay, so you should wait. If a 4-hour candle closes below that support, you should, and when you are selling, you are aiming for that fair value gap at discount. You would aim for that fair value gap at discount. Okay, wait for a bearish candle, and if you're considering buying, I believe anything that will make a candle 4-hour or 1-hour candle closes above the high of these candles, okay, that will be a buy for me. If 4-hour closes above that high, that will be a buy opportunity for me. Okay, so if you want to sell, wait for price to break this support. If you want to buy, wait for price to break the highs of these candles. That's my take on USD JPY. Likely going to be similar to what we have on USD JPY, but let's just look at the charts. JPY, right? CAD JPY. Let me add it. A few minutes. Okay, so I can see this is a bullish setup. Okay, on daily this is a bullish setup, but let's go down. Let's start with the weekly. Let's see what we have on the weekly. Candle closed as an hanging man. Last week candle on CAD JPY, just similar to the pattern, closed as an hanging man, and we had a resistance level. You can see, if you go back, you can see we had our previous highs here. Can you see that? So we had a resistance at this point. Okay, stop losses at this previous high. They just cleared liquidity high. It could be. Okay, we have hanging man, which indicates changing trend from bullish to bearish. You can see. So one could consider jump in and start selling. It will not be wise to jump in and start selling. So let's go down to daily. We have hanging man on weekly. What do we have on daily? So here we have what looks like an engulfing, right? On daily, we have, this is an engulfing. Here we had a doji or spinning top, which indicates changing trend. The next candle has closed bearish. Okay, it has closed bearish, which confirms changing trend. Okay, so if I'm to sell CAD JPY this week, okay, you see this candlestick, this bearish, this doji, this bullish candlestick that formed before this doji. I want to see price break that level. That a bearish candlestick closes below the low of this bullish candle, that would be a sell for me. That would be a sell for me. And if a candle closes above this high, we should expect more bullish move on CAD JPY. We should expect more bullish move on CAD JPY if that high is cleared, because you would see, if you look at the structure we have here on the day, this is a bullish structure, right? From the low, this is an higher low, higher high, higher low. So it's likely going to form a new high. So what we have here is a bullish structure on daily. If we apply the trend line, you can see, if you apply the trend line, you will see that the daily, what we have is what? Can you see that? So we can't just jump in and start what? And start selling. So if that eye is cleared, expect more bullish move on card JPY. Expect more bullish move on card. There's any pair you want us to analyze. If you're yet to subscribe to this channel, on this channel, ensure you subscribe. Also share the link with your friends. Let them also come and learn for free how they can make money trading in the global financial market. Okay, let them come and learn for free. Some of your friends are planning to go and learn how to trade, and it will cost them thousands of naira. It will cost them thousands of naira. Let them come and learn for free. Okay, after learning for free, if they are not considering going for paid class, fine, but let them come and learn the basics. Okay, let them come and learn the basics for free. It's very important. That money they want to use to go for free so that they could have capital to start their business. Share the link with your loved ones. Okay, any other pay you want us to analyze? Any other pay you want us to analyze? GJ should be it's positively correlated with UJ card JPY. Okay, they are correlated. If we go to GJ, we would have similar pattern on GJ. Let's just see GJ. We have similar pattern. So you can see what we have on GJ. Similar pattern. If you look at what we have on GJ it's a resistance level. You can see we had a previous resistance level here. We also hits that level, and there has been a strong resistance from that level. Price has been testing that level, and there's been a rejection, strong rejection. We had a doji that was on Thursday, and on Friday candlestick closed bullish, but it didn't close above the high of that doji, so we cannot jump in and start buying. If it had closed above the high of that doji, we would have considered buying. So my right, a support was formed. So if we are considering selling, we want to ensure that that support is buy. We want to ensure that this high, this previous high is clear. That is when you consider buying GBP JPY. Okay, if you want to sell, wait for that support that was formed on Friday. Let that support be broken before you sell. If you look at the structure on, right, the pattern is similar to what we just saw on CAD JPY and USD JPY. This is a bullish structure. Okay, it's a bullish trend line. Okay, but I would not. Okay, so if you are buying from this level, your stop loss should be this level. If you are selling, use stop loss on every trade you execute. If you are trading Forex and you are not in the market and you cannot be profitable in the long run, you cannot be profitable in the long run. 10 years, and I've met with several traders that are successful, traders that are failing, that are failures in this business. And I can tell you the reason why 90% to 95% of traders that fail don't use stop loss on their trade. They don't use stop loss on their trade. They over leverage. That's why they keep playing accounts. To be successful, ensure that you don't do the things that others do that make them fail. Okay? Do have a trading plan. Okay? So I hope you guys can still hear me. I hope you can still hear me. If you have any question, please ask your question during the live session so that others can learn. Don't come to my inbox to ask questions that you're supposed to ask in the live stream. Ask questions so that others can also learn. Okay, please. If there are no questions, I would have to end this session. I might not remember to post on the social platform. So ensure you subscribe. Ensure you subscribe. Okay, Mr. Oludu, if there are no questions, it means we would have to end this session. Are we good to go? Are we good to go? Oh, sorry. You would have to watch the replay, Mr. Oludu. You would have to watch the replay. Okay, we've been on for close to an hour now. Okay, even over an hour. So the replay will be available in a few minutes. You can check in the next 5-10 minutes. Okay. All right, I want to appreciate you all for your participation. I can see Ebuka, I can see God's time, I can see Mr. Ola, I can see Mr. Ludu. Okay, I appreciate the live market analysis session. We'll be meeting on Tuesday, 10 a.m. Tuesday, Wednesday, and Thursday, I'll be here live. Okay, so we'll be reviewing our biasing market on Tuesday, Wednesday, and Thursday. And if there is change in bias, then I'll let you guys know. Okay, so ensure you show up for a class. Ensure. Okay, you're from side, Mr. Ola. You're welcome. You're welcome. Okay. So ensure you show up for the classes. If you are new to trading, ensure you show up for the Thursday and Friday classes. Those classes are for those who are new to trading. There are some basic things you need to know in the Thursday and Friday Zoom session. It's a Zoom session, okay? So show up for those classes and you'll be glad you did. Okay, so that'll be all for tonight's session. I wish you all a wonderful I wish you all a profitable trading week. Good night.